Hello there, friends and investorholics. Welcome to another ETF Spotlight review. Today we're looking at OZR, which is the State Street Spider S&P ASX 200 Resources Fund. So pretty much in a nutshell, if you're looking for exposure to Australian resources stocks, this is the one for you. Obviously there's a few variations on this theme in the ETF landscape in Australia. This is just one of them. There's about 4 or 5, I think, from memory. They all do slightly different things, but once again, if you're looking for exposure to just the resources sector in Australia, then this would be something to take a look at. Hey there, investorholics, it's Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content. You can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your financial life, expand your investment horizon, and crack your financial sky. Don't be afraid to give us a thumbs up and a subscribe. Okay, so the State Street Spider S&P ASX 200 Resources Fund seeks to closely track before fees and expenses the returns of the S&P ASX 200 index. So the index is a sector sub-index of the S&P ASX 200, obviously. This index provides investors with exposure to the resources sector of the Australian equity market as classified as members of the GISC resources sector. Resources are defined as companies classified in the energy sector, as well as companies classified in the metals and mining industry. So, I mean, you see on the slide, as I alluded to, you got companies like BHP and RIO and WOODSIDE and SANTOS and those type of things. So you not just mining, but you also got that energy exposure as well. As always, we need to think about the why factor. So why on earth are we bothering? Reduce concentration risk. Unlike buying a single stock, investing in a sector may offer greater diversification and reduce concentration risk. And also, if you don't want to pick individual stocks, you can't be bothered doing the research, but you're interested in the resource sector, like I said, that might be something to look at. Capture capital growth, potential to benefit from favourable economic trends driven by global resources demand. So, when you're looking at these type of things, you've got to understand that resources, mining, energy, those type of things are counter-cyclical. So when one part of the market's up, another part of the market's down. So you just got to be careful when resources are down. That might be the time to be buying and getting this ETF a bit cheaper. But you got to understand that you are investing in a cyclical industry, and there will be ups and downs. So benefits from Australian and international trade. If I can untangle my tongue, the Australian resources sector may, it's well positioned to benefit from international trade with partners in emerging markets. I mean, we all hear about the talk about China and all those type of places, but China typically dominates where resources go to, so that they're the major buyer. But that could possibly change over time with India and some other countries sort of growing at a quicker pace as well. Okay, so we had a net asset value of $14.01, trading just above that at $14.03 when I did the research. Market cap of 153 million, management fee 0.34%. You get a dividend semi-annually. Dividend yield is quite high, given the fact that the resources industry at the moment is kind of going through an upswing, I'd say, and a lot of these companies are actually returning capital back to the shareholders. So therefore, if you're investing in this ETF, you're going to get a good dividend as well. So using an ETF such as OZR allows the investor to take a view on the resources sector instead of picking individual companies, as I sort of mentioned before. If you can't be bothered doing a little bit of research to find out which are the better companies, got better outlooks, just buy the whole sector and job's done. This ETF could be potentially used as a satellite position to expose investors' portfolios to ongoing growth in India and emerging markets. As I sort of mentioned before, it's sort of always something to keep in mind that the mining and resources sector is highly cyclical, which means it's a higher risk sector to invest in. Having said that, resources sector is the engine of the Australian economy. Australia used to be on the sheep's back, but now it's kind of mining and that type of stuff sort of drives the economy. It's definitely a sector that creates great wealth on a regular basis. As always, we need to make sure we're doing our research. So there's a couple other ETFs there to have a look at, QRE and MNRS. So I think from memory, MNRS is an international type focused one, so that might give you a bit of a flavour on what else is available in the market as well. So as I touched on before, just taking a look at the top 10 companies. So you got BHP, Woodside, RIO, FORTESCUE, SANTOS, South 32, Newcrest, MinRes, Pilbara, and Northern Star. So you look at BHP, RIO, Fortescue, they're in the top 8 to 10 biggest dividend payers on the ASX in total. So you're getting exposure to those big guys that pay out the good chunks of cash. Plus if you've got an interest in oil and gas, you got that sort of covered too, but mainly gas with Santos and Woodside. Plus, you've got a little bit of lithium at the bottom there. MinRes plays a bit of lithium and iron ore, and Pilbara is iron ore. Pilbara Minerals is lithium exclusively. And then you got some gold companies as well with Northern Star and Newcrest. So good cross section of different sub industries, I suppose you could say. Over the last 12 months, the ETFs had pretty good return. You would have seen a bit over 20%. Almost 21%. The last 5 years you haven't done too bad, so you would have seen over 10%. Since inception, doesn't actually look that good, to be honest. You're sort of under 4%. So like I said, these things are highly cyclical. So there's definitely times to buy, and those times are when we're down. So you want to be buying on the downswing on these things and know that they're going to come up, and then what do you hold on through the upswing, and then add to your position on when things turn down again, or do you sell out at the top? I mean, they're things that need to be thought out, I suppose, when you're making your investment decisions. But I think if you are interested, this one would be something I like resources, so this would be something to have a bit of a closer look at. Good dividend yield as well, and that's something to always keep in the back of your mind as well, so you get a bit of income. But yeah, on the whole, I think this might be one to take a closer look at. If you're looking to add a little bit more resources exposure to your portfolio, it probably couldn't hurt to get the PDS and have a look through it. Hey there, are you interested in learning more about personal finance and investing in the markets? If you are, smash the like and subscribe buttons down the bottom of the screen there. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are, expand your financial horizon, and crack your financial sky. Hey guys, I hope you enjoyed the video. Please give me a like and subscribe. Greatly appreciated. Thank you.